All right, so we are now live. Are you hear me? You hear me, Mr. Nicholson? All right, so we are now live. Can you hear me? Hear me, Mr. Nicholson? All right, so hear me now?
Yes, I am. Sorry about that.
Okay, good. All right, so we're live. All right, so you can give everyone about 5 minutes to get here. I'm gonna send you the link so you can keep a track of the number of participants. All right.
Yes, I am. No problem.
Okay. All right. All right. So we're
Hi everyone, just giving everybody a few more minutes to come on and then we go ahead and begin. You can also let me know if you're hearing in the chat and if I'm coming across clear. All right, just giving everybody else another minutes and then we'll begin. All right, let's get back to it. I trust that everybody's Sunday is going well so far. I do not have gotten a chance to have breakfast as yet. Hopefully get to do so soon or get lunch. And hope everybody's excited to start school tomorrow. All right, so we're going to do a past table for this session. And the aim is to go through as much questions as possible in the time, as well as to basically just explain some concepts and why the answers are those that explain the reason or how we got those answers. All right, so if you're hearing me again, comment in the chat so I just can see who's following and being able to go back and over any concept or anything like that. So we are starting, we're actually doing a 2018 past paper, 20. So starting with number 1, feel free to send your answers in the chat. And if I see any answers, I'll comment or respond to it. So number 1 says, non-trading organization is mainly concerned with. Options are A, importing goods for resale, B, trading only with wholesalers, C, making maximum profit for the proprietor, or D, providing various services for its members. So a non-trading, so B would fall under the category of trading. So that is what trading. And also they don't only do wholesalers, but they do trading. So non-trading is they're doing services. They're not buying and selling goods. So that's the concept. So this one is definitely old. They're not doing goods. They're not trading goods. So they're not buying goods to resell. So importing would not be an option. So the most suitable answer is D, providing various services for their members. And non-trading is usually providing services, and the aim is to basically satisfy a particular need of their members. All right. For number 2, the term accounting refers to A, the use of information in making business decisions. B says the use of special ways of recording business information. C says the recording, analyzing, and interpreting of business information. And D says journalizing, posting, and balancing of accounting special reports. Look at the various options. Feel free to send your answer in the chat on what you think it may be. All right, an aspect of accounting is using information to make decisions, but that's not all it is. So A is incomplete. B says the use of special ways of recording business information. So again, this only speaks on the recording aspect of it. This is using the information to make decisions. So both of these are incomplete. D says journalizing, posting, and balancing of accounts. So that is, I see somebody said C, that is correct. So journalizing, posting, and balancing, that is the accounting cycle. and that is, it doesn't capture the full component of it. So what an accounting example is one recording. So you're doing your bookkeeping, you're posting your entries, and then from that recording, you're supposed to analyze the information and interpret it to make informed decisions. So number 2 would be C. Good job. All right, number 3. It says rent expense, which is still owing, at the end of the period must be debited in the profit and loss account and shown in the balance sheet as a liability. Which accounting concept does this represent? Is it accrual? Accrual concept says that we recognize expenses and income in the period that they relate to. So if we're in 2024, January 2024, no, we need to record all of January's expenses in this month. And if we paid for an expense last year, we that is for January. In last year, we would have to recognize it as a prepayment, and in this year, we need to recognize the expense in there. So accrual, the expenses are posted in the period that they relate to, for income and expenses. Consistency theory has to do with the method that you are accounting for. So that has to do with, okay, if you are doing depreciation on a straight line basis, you're not switching between straight line and reducing as year progresses. You're maintaining the policy that you're using on a consistent basis. Going concern has to do with if the business is expected to continue into the near or foreseeable future, that means its ongoing concern is going to continue. Money measurement is just a principle that transactions should have a monetary value and they should be able to be measured. So person responded and said A is correct. So it's the accrual basis, which says that if the expense relates to this period, it needs to be debited in this period. So if at the end of 2023, you have an expense for December 2023 that you have not recorded, you need to debit that to your expense account and put the corresponding entry to the liability account, which essentially saying that I have this owing to be paid. So number 3 is A as in apple. Number 4, which of the following accounts are nominal accounts? So I think somebody said, I'm not sure which letters those are for. All right, so your nominal accounts are your expenses. So your rents and wages would be your nominal accounts. Debtors, those are personal accounts. So your debtors and creditors are personal accounts. And so the answer, the one that captures both expenses, is A as in apple. So that is correct. So most persons are getting them right. So I trust that everybody's following. So we continue right along. Number 5, a public limited company issued a prospectus offering the shares described in the table below for sale at par value. So essentially, whatever the par value is, it is what they are asking for it. That's what you're saying. So the issue was fully subscribed for. That means that if they offer 200, everybody bought the 200. If they offer 10,000, everybody bought it. So everything that they offered, it was fully subscribed to. That means person paid for it. So what would be the capital that the company raised? Options are 40,000, 45,000, 400,000, and 450. I'm not seeing any answers for number 5 as yet, so giving you a minute or so to work it out, and then I'll explain how we got the answer. All right, so essentially what you had to do is, so it says everything was subscribed for. So they purchased the 200 here, they purchased the 100, the 10,000 here. So all you have to do is multiply the two numbers by their par value, total them, and that will give you the amount that was raised. Anybody has that answer? Right, so 200 times $2 would be 400,000. 200 times $5 would be 50,000. So we're adding 400,000 plus 50,000, and that should give us 450,000, which is what T as in dog says. I trust that you are following that one. If not, you can indicate in the chat. And if you are, we'll just continue right with. All right, so for item 6, it refers to item 6 refers to the following information. A calculation to determine gross profit percentage is as follows. 185,530 divided by 529,800 times 100 over 1 is equal to 35.02%. So in order to answer the question, you need to know what you need to know what's the gross profit percentage calculation or formula is. So how do you find gross profit percentage? Same thing as gross profit margin. What's the formula? Asks you what the 529,800 represents. So in order for us to find gross profit margin, we do gross profit. We do gross profit, and we divide that by the total sales, and then we times that by 100. Because the reason we times it by 100 because we're essentially expressing it as a percentage, and to express it as a percentage, you times by 100. So so see the response. So in this case, it asks for the gross profit margin or the gross profit percentage. So that one is gross profit, that will be at the top. If it asks you for your net profit percentage or net profit margin, then it's net profit at the top, total sales at the bottom. So that is correct. So your total sales would be the 529,800, which would be A as in all right, so person seems to be following. So that is the first 6. We'll continue right below. All right, so you corrected it. So yes, it's gross profit. Perfect. All right, so number 7 says the summarized position of Foster and Scott's Limited at the 6th of March 2015 was this. So essentially, these are information that will be captured on their balance sheet. What it's asking you is to calculate what the capital is. So there is an accounting equation, so you need to know what the accounting equation is. Then you need to plug in those numbers in order to find the capital. So somebody can tell me what the accounting equation is. It has to do with what is equal to what. So how would you come up to capital? What do you need to plug in? What figures do you need to add, subtract in order to find your capital? What's the accounting equation? So it's assets is equal to equity plus liability. Equity is the same as capital. So in math, if you're trying to find equity on or get equity on a side by itself, you need to carry over the liability. So we're adding liability. So if we carry over an addition of liability over to this side, it becomes a subtraction. So another way to find capital is assets minus liability is equal to equity. Again, equity is the same as capital. Yeah. All right, so we have liabilities of 60,000, so that falls under the L category. This is also liability, falls under the L category. And then these two, as the name suggests, those are capital. So you have to total what your asset, sorry, those two are assets. So you have to total what your assets are. So 100,000 plus 200,000 is equal to 300,000. So total assets is 300,000. Your total liabilities is 150 plus 60. So that is 210. So we have assets of 300 minus liabilities of 210. That will give you your capital figure of 90, as somebody rightfully said B. So two persons said B. That is correct. Good job. So number 2 is B as in boy. Continuing. Number 8. If the following list of assets found on a balance sheet of a retail trader were to be arranged in order of liquidity, the sequence would be, all right, so the options are motor vehicle, building, bank, fixtures, cash, debtors. B says cash, fixtures, debtors, bank, building, motor vehicle. C says cash, bank, fixtures, debtors, motor vehicle, building. D says cash, bank, debtors, motor vehicle, motor van, fixtures, and then building. So liquidity has to do with how quickly can they readily be converted to cash. So it says in order of liquidity. So it's the most liquid that needs to come first. We can eliminate A because cash is always the most liquid. So cash comes first. So we have to choose between B, C, and D. So cash is the most liquid because it's literally cash. And what liquidity means is how quickly can you convert it to cash. So after you can convert cash to cash, which is already in cash, the next one will be bank because that is in the bank account. And then you can just go to the ATM and withdraw it or go to the bank and withdraw it. So bank is usually the second most liquid. So B is out. So we're choosing between C and D. All right, so after you have your current assets are more liquid than your fixed assets. Your fixed assets, they take a longer time. So if you think of it, you are able to collect. Debtors are short-term things. They are usually repayable in a 1 year time frame, usually much shorter, but usually repayable within 1 year. If you think of a motor van, if you're supposed to sell a motor van, you're not able to sell it as quickly because you'd have to find a buyer, you'd have to go to the houses. So debtors, which is another current asset, would be the next most liquid thing on the list. Then you have your assets, your fixed assets. So a motor van can be readily sold, fixtures, and then finally the one that was going to take you the longest would be your building, because again, that is our whole process to basically sell and get money from that. So D as in dog is the correct answer for number 8. All right, so yes, D is correct. Good job. Number 9, continuing the items raw material inventory work in progress. Inventory and finished goods inventory are most likely seen together on the balance sheet of which company? So is this a garage? So would you have raw material in a garage? Raw material is like you buying like a pine to make a pineapple juice or orange to make orange juice. Would you have it at a shoe factory? Would you buy like leather to make something? Would you have it at a supermarket? So essentially it's asking you which of these companies buy raw material, use that raw material to make something else, and then ultimately sells the finished goods. So which one would it be? A garage, a shoe factory, a supermarket, or a bus company? Right, the most likely one would be right, so somebody said B. Yes, B would be the most likely one. A garage, they're not really selling goods, or if there are some garages sell goods, but if they're selling a car, it will be the finished car. So they would have finished goods, they're not making things. or sometimes they just do a supermarket. It's usually finished goods that they get from the manufacturers, and bus company they just do transportation. So that's a finished good. All right, so number 10 for items 10 refer to the following. Items 10 refer to the following information about two partners. Jane and Max are in a partnership sharing profits in the ratio of 3/5 or 3/5 and 2/5 respectively. So that means that Jane gets 3/5, Max gets 2/5. The following balances are taken from your books. So this is your net profit. And then from the net profit, so the question is asking you how much money should Max, which is the second person, receive as his share of the residual profit. So it says residual profit. Essentially, you have to deduct these amounts before you get to the residual profit. So I'm going to give everybody a few minutes so let's look that through. And then once you have an answer, you can send it in the chat. Okay, somebody said D. I don't know if this is for this question. So I think this is some B's and some D's. I'm giving everybody another minute. So for this one, so you start with the net profit of 23,500. And then you're doing so you withdraw his salary max, because that would be deducted before. So that we have 23,000.5 minus 2.5, we're down to 21,000. His interest on drawings is also deducted. So we deduct 0.1. We deduct 140,000. So we're down to 20,860. And we deduct his drawings 1.4, 2860, 100, down to 19,460. Deduct the interest on capital 1,000, we're down to 18,460. So deduct all his deductions. And after you deduct that, you'll get to 18,460, which we share between him respectively. So he gets 2/5 of the residual amount. The 2/5 of the 18,460, 87,316. So answer for this would be A. And then Jane's share would have been her deduction would have been the -2 from here, -1.5 for her drawings, -150. And then she'll get the rest after all of those deductions. All right, so number 10 is A. I didn't see anybody has the answer for number A. So essentially, it's to deduct Max's deduction, all his deduction, then multiply by 2/5. And then Jane's would be her deductions, and then 3/5 of what you have as the net profit for her. All right, number 11, in a cooperative society, the daily affairs are administered by the majority of shareholders, all members meeting together, the chairman of the board only, or the persons elected or appointed to do so. Now go ahead with your answer for number 11. So who administers the daily affairs in a cooperative society? So usually you don't want too many persons doing it, so it would not be the majority of the shareholders. The members, they're able to vote and make decisions, but in terms of the administrative side, you usually appoint somebody who works on an operation side. The chairman is a person who is responsible for like the board meeting. He chairs the board meetings with the other board members. And then for the day-to-day running, what they usually appoint is like a general manager or somebody to work within the corporation. This person is usually an executive director. They work within and they are able to make decisions on the day-to-day affairs. All right, so that's number 11. Number 12. What's the correct chosen total for sales? So what this one is asking you for is to drop a sales account or look at which of these affects the sales account, which of these are still transactions, and then total them together. All right, when you have your answer for number 12, just send it in the chat. All right, so total sales would be 55. That's what somebody sent in the chat. That is correct. So essentially the sales transactions are these two. This is an inventory item, so stock on hand is inventory. Joins is it offsets against the capital account, and these two are purchases account. So 55 is correct. Number 13, item refers to the following accounts, the appropriation accounts. So we have these different things in it. It says what conclusions could be drawn from the above appropriation account? Is it that the company is engaged in profitable enterprise? So what type of company usually uses an appropriation account? 2, is it that the company is not doing too well? Or 3, is it that more dividends can be given to the shareholders? So look at what their profit is, what the dividends are being declared, and then based on what they need to maintain in taxation, and based on that, can they pay out more? So what is the answer for 13? Is it 1 only, that they're engaging in profitable enterprise? Is it 2 only, that they're doing well? Is it 1 and 3, they're profitable organization and they can pay out more? Or is it 2 and 3, they're not doing well and they can pay out more? So 1D is automatically O, because if they're not doing well, they would not be able to pay more. So that one is O. For 13, we're choosing between A, B, and C. Right, 13 would be B. So the company is not doing too well because they have to maintain $10,000 in reserve. They have a net profit of 26. So from that, they have 16 that they're able to distribute, and they are essentially putting them in dividends and everything. So they don't have much to maintain that. So they're not doing too well. All right, continuing. Number 14 says, which of the following accounts are usually transferred to the trading and profit and loss accounts? Is it rent, premises, and drawings? So the trading and profit and loss account is essentially the income statement. So these should be income and expense items. So is it drawings, rent, and purchases? Is it commission received, rent and purchases? Or is it purchases, furniture, commission, and commission received? All right, Tashkia, I think that you're saying that you don't understand B, 13. The reason 13 is B, that they're not doing well, is because of what their net profit is, what they have, what they're paying out in dividends, and what they have to retain. It's not a profitable organization, because profitable organization don't usually use this account. They usually use a trading profit and loss account. So this one is out because of the appropriation account that is not usually in a profitable or profit-making organization. They can't afford to pay out more dividends because this is 26,000. They have to maintain reserve. They have to maintain $10,000, and then based on what would be left after you pay off after you deduct all of these, there's not really much left over for you to say that they can afford to pay more. So they're not doing well based on their profit, all the reserves that they have to maintain, and the dividends that they have to pay. So that's why 13 is B. All right, somebody said C for number 14. That is correct. So A is out because, again, the trading and profit and loss account, it should carry income items and expense items. Premises is an asset. Drawings is an offset account against a capital account. So the only expense in A is rent. So that is out. Again, drawings is a balance sheet item. So that one is out. This is a balance sheet item and it's an asset. So this one is out. So that means C, the only one that has all expenses and income. It's number 15. On the 2nd of March 2017, L. Lan bought goods worth $630 on credit. He receives a 3% trade discount. So there is no criteria that he had to meet to get the 3%. So he just got it. But then if he pays 2%, if he pays the invoice, so when it says 2%, 20 days, net 30 days, what that means is that he has 30 days to pay the invoice. But if he pays in 20 days or less, he gets a 2% discount. So he's getting the 3%, regardless, he's not doing anything to get the 3%, it's automatically given to him. But then if he goes ahead and pays it within 20 days, he gets an additional 2%. So how much will he pay for the goods if he pays on March 8th? The first thing you have to do is to see how much days that is. He pays in 6 days, so he's paying within the 20 days, so he will get the 2%, and he automatically gets the 3%. It's just a trade discount given to all customers. So how much will he end up paying? Is it 595? Is it 598.88? Is it 611 and 10 or is it 630? So one, we can eliminate 630 because he is getting some discount. He qualifies for the 3% because that's just automatically given. It didn't say he needed any conditions. And the 2%, he gets it because he's paying in 6 days. So we're choosing between A, B, and C. All right, somebody said B. All right, the others, you can look at that for another minute and then we'll explain how we got the, so B is correct. We'll explain how it's a good job. So we'll explain how we got B. So one of the first thing you do, all right, somebody got B as well, so awesome. So one of the first thing is you do the 3%. So you do the 3% first. So now we have 63 times 3. 63 times 3 is 189, and we divide that by 10. So one, you could have done the 3%, and the 3% would be 18.9. And if you did that, you'd have to take that from the 330. So 330 minus 18. 18.9. So this gives you what the 3% is, but there's an additional 2%. So this one is out because that would be what the 3% discount is. You can also do, if you don't want to subtract after, you can do 100% minus the discount of 3%. That gives you 97%, and that will give you what the amount is after the discount. So the amount after the discount of 3% would be the 611.10. But then we have a further discount of 2%. So we do 611.10 times 2% to find what the discount is, and then subtract it from the 611.1, or we do 98% because that is 100% minus the 2% discount, and that will tell you what the net figure is after that discount. So that net figure would be the 598.88. All right, so 2 persons got it, so good job with that. So number 15 is B as in boy. Number 16, when a proprietor withdraws cash or other assets from a business, which effect does it have on drawings or capital? Does it decrease the capital? So capital is money that the owner invested in So if he invests it money and then he's taking some out of that investment, is that a decrease or an increase to capital? It is a decrease to drawings. Drawings is treated similar to an expense account. So to increase it, if you have a account name drawings, to increase it, you debit it. And the drawings is going up. So drawings is going up. So it's definitely not a decrease, it's an increase in drawings. Is it that neither drawings nor capital is affected? That one is out as well, because it's definitely going to affect the drawings account. And usually if a company has a drawings account, what they do is put the expenses there, or the alternative is to just use the capital account to do everything. So if you're using a capital account, you have debited the drawings in the capital account, and when you're increasing the capital account, you credit it. So somebody said it's a decrease to capital. That should make sense, because essentially what capital is money that you're pumping into the business. If you're pumping more into the business, it's going to increase capital. But if you're taking from the money that you pumped into the business, that is going to decrease the amount that you have, therefore decrease your capital. All right, perfect. Number 17, the total credit of the bank column of a 3-column cash book. Sure, just send it in the chat, I'll read it and then I'll respond. I'm sure you can ask your question. Does drawings affect the purchases? Drawings affects capital. So purchases is goods that you have bought to resell. Drawings is you pulling from the amount that you invested as an owner. So that affects the capital. So hopefully that answers your question. It affects capital. All right, so the total credit of the bank column of a 3-column cash book is greater than, so the credit goes on the right side. So the debit side is the money that you have received. So these are like deposits or payments that you get from your customer. And on this side, the credit side, these are payments that you are making out. So what is the most likely reason? Is it that there is an overdraft? Is it that the transactions were omitted from the debit side? Is it that some figures were overstated on the credit side? Or is it that the incorrect transactions were entered on the credit side? All right, so somebody says A, there is an overdraft. All right, so your bank, some banks allow an overdraft facility. So essentially what this is saying is that you have $50 on this side and you have $150 on this side. So if you have more on the credit side, that means that you're in the negative, and that is essentially an overdraft. What that means is that you paid out more money than what you had available. Transactions were omitted from the debit side. Yes, that is possible. But if you don't know that the amount that is omitted is more than this, so just being omitted. So for example, if just one transaction was omitted and it just came out to 50, this side is still less than this side, so it's still an overdraft. So unless the ones omitted is more than the ones on the credit side, that's not really the most likely option. So this side is overstated, yes, but again, if it's overstated by just 50, then that means that this just goes down to 100. This is still 50. So this side is still more, it's still in an overdraft state. Incorrect transactions were entered on the credit side, still a possibility. But what is the value of those missing transactions? Will it now make the debit side more? So the most suitable one, because these, we don't know the value of these, and it could still lead to the next side, the credit side still being more. So based on this, the option is that you would have paid out more than you had available in the bank account, and as a result, you are now in overdraft. But if you double the entry, don't you use the purchases account? All right, so in the double entry of, when you're making a double entry of drawings, so you debit the drawings account, and or you debit the you debit the joint account or the capital account, because if you don't have a joint account, you put everything into your capital account. The corresponding credit is that usually money is leaving your account. So it would be, you're giving the person money. So you debit joint or capital, and then the corresponding entry goes to bank, because usually it's money that they're taking out of the business. So that deduction needs to go against the bank account. So, so hopefully that answers that person's question about the joint. So the next side of the entry is not purchasing. The next side of the entry is usually bank, because usually it's the person taking out $1,000 out of their account. You need to put the debits to joint or capital, and then the credit to a bank, because no money is leaving your bank. I trust that everybody's following, and if so, we'll move right along to number 18. All right, if the stock turnover ratio is 5 times and the average stock is 28,000, what is the cost of goods sold? So one of the first thing you need to know is, what is the stock turnover ratio? What is that formula? How do you find stock turnover ratio? So somebody can set that answer in the chat. And then subsequently what the answer is for number 8. Everybody for the formula for stock turnover. So firstly, it's average stock divided by cost of goods sold. So we know the average, we know the cost of goods sold, sorry, we know the ratio, we know that it's going to be 5 times. We know the average stock, which is 28,000. So we're going to use those information and solve for cost of goods sold. So we divided 28,000 by, a number. Sorry. So it's cost of goods sold divided by average stock. So we had a number that we don't know. We divided it by. So we have cost of goods sold. We divided a number by 28 and got 5. So if we divide it to get it, we need to multiply to get to do the flip. So to get to what the cost of goods sold is, you do 5 times 28, and that gives you the cost of goods sold. You can, after you find the answer, you can plug it in and check it back and say, if I divide this number by 28, will I get back 5? So yes, the answer would be C147. All right, that is correct. All right, so somebody's asking if it's a drawings of stock, would it be purchases? So you're saying if they withdraw goods from the account. So purchases usually carries a debit balance. So what they'll do is, that would have to be a 2 entry in terms of, you would still have to do, you'd credit the purchases account, because you'd have to show the withdrawal of the stock from it, and then you'll debit the joint account. So that one, you don't have any movement of money. But some persons, they want to basically net that out. So if it's a reduction of stocks, if they're taking stocks, then yes, you debit the joint account and credit the purchases because you're losing goods in this case. If it's a case that you're losing money or you're giving the person money, then yes, it would go to the bank. But if it's goods, then the corresponding credit goes to purchases. So thanks for that. All right, number 19, the proprietor of a business paid a personal car repair bill from the bank account of the business. So it's essentially, I have a business, I have my personal car, and I paid the bill to repair that personal car from the business bank account. The amount was debited to the miscellaneous expense account. Which of the following concepts was violated by posting the bill to that account? Is it the matching concept? The matching concept says that you match income and expenses to the period that they relate to. Prudence concept says it's about not overstating your assets and your income. So it's better to kind of understate them than to overstate them. And then for your liabilities and your liabilities and your expenses not to understate them. So it's better to bring them up a little than to understate them. Going concern that the business will continue into the foreseeable future. Business entity, that's also referred to as separate entity concept. That's expenses for the business. Only expenses for the business should be reported in the business account, and personal accounts should be kept separate. All right, so based on that, which concept is being violated for number 19? Not seeing any answers yet. All right, this one would be the business entity concept, because essentially what is happening here is that they are recording personal expenses in a business account, and the principle says that only business transactions should go into the business account. So yes, I see the answer T, so that is correct. All right, number 20, continuing right along. Which of the following documents acknowledge a loan to a company at a fixed rate of interest? So which one is a loan and it's like a fixed rate that you get at the school? Is it debenture, license, flyers, or stock? Answer for 20. All right, so a debenture is essentially what that is. So debenture, it quotes what the rate is, and it's a loan that is payable at a fixed rate of interest. So it doesn't change over the duration of the life of the loan. So number 20 is A as an apple. Continuing. Sorry. Our 21 motor van was credited from AG Motors for use in the business. How should the buyer record a transaction? What exactly this is saying is I bought a motor van from a company called AG Motors. How should I record that in my books? So this is that motor vehicle that I'm getting. Is that an increase or decrease to the motor vehicle account? And I owe this person AG Motors for it because I got it on credit. So is that an increase or decrease? Is that person a debtor, creditor? What exactly? So options are to debit motor vehicle, credit the bank account. So it says that we are crediting from them. So crediting means that we're not paying any money. So no money is leaving our bank account. So this part is definitely out because that is saying that we're losing money from the bank account. That is not what is happening. Debit motor vehicle expense account. So an expense account is is an expense, and this is not what an expense is, an asset that we're getting, so we're not debiting the into equal expenses. Debit purchases account. Purchases account is used for goods that we are reselling, so we're buying and selling goods. So usually for stocks that we're reselling, so that's not what is happening here. So that one is false. Somebody said D as in dog, that is correct. So it's an asset account. Motor vehicle asset account needs to be debited. And the person that we owe is a supplier, which is a liability account. So that needs to be credited because we increase liability accounts or suppliers account by crediting them. So 21 is D as in dog, that is correct. I trust that everybody's following, so continuing. Okay, continuing. So 22 refers to the following balance sheet. It says that what is the amount of total fixed asset? Keyword fixed assets. Is it 9,000? So if it's 9,000, it's saying that only the land and building is fixed assets. Is that true? Is it 14,000? So if it's 14,000, it's saying just the land and motor vehicle is not the land and building and motor vehicle are fixed asset. Is that true? Next option is 14,600. So it factors in these three. Are those the three fixed assets? And the other option is 15 or 50. And that factors in. And that factors in these four. So which one is correct? Which one is total assets? So, I'm trying to see back the comments. Bear with me. Right, but but this one is sales impact. So it would be land and building, motor van and fixtures and fittings. So that is correct. Good job. I continuing 23. The MK Trucking Company received a check from Mrs. Henry. How must this transaction be recorded in MK Trucking's book? So MK Trucking is the person that got the check and they got it from Mrs. Henry. Is it that the cash book should be credited? That means that M Trucking is losing money. Is that what is happening? Is it that the Mrs. Henry's account should be credited? So you have to determine if Mrs. Henry is a debtor or creditor. Is it that the bank account needs to be debited because they're receiving money? So one, we can eliminate D because D says three things, but not necessarily. Because sometimes a transaction can have three parts, but most times it's one account debited and one account credited. So what do you have for 23? Anybody? All right, 23 is money is coming into the bank account for sure because they received a check. So debits of bank. So 3 is definitely one of the option. Crediting the cash book means that you are losing cash, a cash payment, which is not what is happening. So the other option is that Mrs. Henry, which would be a debtor, so their balance would have been on the debit side. Now that they're making payment, it goes on the credit side because now their balance is going down from what they initially had. So C as in cat would be the answer for 23. Right, CC as in cat for somebody, good job. 24, the item refers to the following data which are taken from the records of a hardware store at the end of its fiscal year. So it's asking you for find the gross profit. So one, you have to what the format, what you have to figure out how do you find gross profits, and which one of these numbers are plugged in, what do you add, what do you subtract. So go ahead. One, what is the formula to find gross profit? What do you add? And also tell me what the answer is for 24. Giving everybody a minute to think that one through. We'll go through. Right, so first again, finding out what the formula for gross profit. So one, you have to find your net sales. Your net sales is your sales minus your sales return. While we're minusing the sales return is essentially we sold 83,868 worth of goods, and of that amount, 1,570 was returned. So that needs to be a deduction because it needs to take from that balance to get your net sales. So if we do 83,868 minus 1,570, we get a net sales of 82,298. And then for our cost of goods sold, we need to just figure out how we find that. Our cost of goods sold comprises of our opening inventory. The reason for that is essentially what cost of goods sold is. It's how much you have sold. It's a cost ascribed to how much you have sold during the year. So our opening inventory would have been brought onto our balance sheet because what we so our opening inventory would have been the ending inventory from last year that would be on our balance sheet. So what we're trying to do is to take it from the balance sheet and put it onto our income statement, and essentially we're selling that goods. So we start with our inventory at the start, which is 950, and then we add to that purchases. This is amounts that we have bought during the year that we have sold. So everything that we bought through the year, we put onto our income statement. And then from that, we would not have sold everything. So we back what we have not sold out, which represents our closing inventory. We back it out from the income statement because it would have been part of our purchases figure. We back it out, and then the corresponding entry would have been that it goes to our balance sheet. So we take it out of the income statement, which is 11,075, and also from our purchases return, just like sales, we had purchased 52,640, but included in that amount is some that we would have returned. So we need to take out the amounts that we have returned. So our cost of goods sold would be our opening inventory, which is 9,850, plus our purchases, 52,640, minus our returns, 762, minus our closing inventory. You can put it in separate columns and work them out. But our cost of goods figure will be 50,653. And then to find our gross profit, we do our sales, our net sales, which was 82,298. And so our cost of goods figure of 50,653, and that should give us 31,645, which is B as in boy. Great, let's see that you're following. So essentially, we subtract these two, we get our net sales. Then and this one is not factored in. Just to know, this would be an expense item because it's essentially a cost that we incur to basically sell to our customers. So it's expense on our income statements. So it's opening minus the closing plus the purchases minus the purchases return. So that gives us B as in boy. Hi, if you're not following, indicate in the chat. If you're following, always feel free to send the answers that you have got. So 25, an interest in drawings will result in an increase in long-term liability. Again, drawings affects capital. So this one is both. So we're choosing between, is it decreasing capital? Is it increasing capital? So B and D is actually the same thing. So the answer is either B and D. So it's not increasing capital because we just said what capital is money that the owner pumps into the business. So what exactly is happening is that the money is going down. So it's a decrease to capital. So this answer is B or D. Great. Just that everybody's following. If not following, indicate in the chats. Item 26 refers to the following information. So it asks you what the label at I should. So if, when you're labeling any statement, you usually have the company's name at the top. So it's essentially asking you which statement is this? Is it a profit and loss account? Or which account is it? Is it a profit and loss? It shows expenses on this side. It shows profit from the bar, subscription dues. At the end, it shows the surplus. Is it a profit and loss account? Is it a trading account? So the trading account shows the gross profit section and your cost of goods sold and your sales. So it doesn't have the sales. It's not a trading account. Is it C, an income and expenditure account, or is it D, a profit and loss account? So this one is an income and expenditure account because it has subscription due. So we know that it's not a profit-making company. It's more than likely a non-profit business that is like doing something that they generate some surplus from. and then we have profits plus something plus subscription dues at the end. So is it rent received? Usually non-profit making companies don't do rent. Is it subscription received? Subscription received would be part of the income portion. So that would not be that. Sorry, not true. So so it's subscription received, but this is the income portion, but this is the credit side. So it would be subscription received, but this would not be, it would not be a trading account. So this one is owed. So it's subscription received plus the subscription that is unpaid, that will give you your total profit. And then on the other side, it has your expenses. So this one would be C, I think, cap for 26. Right, again, everyone, feel free to send your responses in the chat just so I can see where you're at and I can see if you have any questions. At 27, for items 27, reference to the following information. On January 1st, 2016, $10,000 was paid towards an advertising campaign. Of this $10,000, $7,000 was used by December 31st, 2016. So again, we need to follow the accrual concept that says that expenses that relates to that year is only that expense, only those expenses that are recorded in that year. Anything that doesn't relate to the year, it's recorded into the period that it relates to. So what this is asking you, if I paid $10,000, but only $7,000 was for that year, what amount is prepaid? Is it $3,000? The $7,000 that is for the year? Is it the $10,000 that I paid? Or is it that you need to add up both numbers and the 17 is the prepayment? What is the answer for number 27? So the prepaid amount would be the amount that you paid of $10,000 minus the amount that was for the year. Because the amount for the year would have been in the correct period, but then you would have paid $3,000 extra that did not relate to the year. So the $3,000 is the prepaid amount. So again, you paid this amount and only $7,000 of that amount was for this year. So the other amount is that you paid in advance. So putting it in practical terms, you paid JPS $10,000, but then December they sent you a bill, it comes up to $7,000. That means you paid them $3,000 in advance, which will apply to your January bill for 2024. All right, number 28. During the year, a company bought stationery for $220,000 and used $120,000 worth of it. What is the expenditure for stationery that would be posted to the profit and loss account? So it's essentially asking you how much is for that year. Do you need to add the two figures and get 340? Do you need to post the amount that you paid for the year? Do you need to do the 120 that was used in the year? Or do you need to find the difference between the two? What is the answer for number 28? All right, so the amount for the year is the amount that you would have used during the year. So you don't need to do any calculation for this. You just need to plug in the figure. So the figure is the 120 because that's, again, we post in the year the amount that we've used or the cost that we have incurred. The amount we have used is 120, so that is the amount for the year. All right, 29, again, always feel free to use the chat so I can know that you're following, send your responses and any questions that you are having. If you're not following, feel free to indicate that in the chat as well. 29, to which account should the depreciation of office machines be transferred to? Should it be transferred to the trading account? The trading account shows the gross profit section, since your sales minus your cost of goods sold. Cost of goods sold is comprised of your inventory, your purchases, so forth. Or is it the manufacturing account? Manufacturing, so these are companies that they make items, so they have your label, your raw material, you come up with your prime cost and so forth. Should it go to the profit and loss account? This shows it pulls up gross profit from the trading account and then do your expenses and you come up with your net profit. Or should it go to the appropriation account, which usually is for non-trading companies? So depreciation, which account should it go to? Send your answer in the chats, share your thoughts. All right, so that's one would be your profit and loss account, because this is where your expenses are. Depreciation would fall under the expense category, usually an administrative expense. All right, continuing. So for this one, and if you can share your thoughts, that would be lovely for this one. So it gives you your current assets, your current liability, and then it gives you your asset test ratio, and it asks you to find the value of closing stock. So tell me what your thoughts are on this one. How would you find the closing stock, and how much is the closing stock? I'll give you a minute or two to think that one through, and then I'll walk you through it. All right, so for this one, for current assets, so what you have to do is use your current asset ratio and your asset test ratio. So how we find current ratio? Or current ratio is your current asset divided by your current liability. And then your asset test ratio, it doesn't factor in your inventory, so you back out inventory. So it's similar to your current ratio, but this time you take out inventory. So using those two ratios, you should be able to find out what inventory is. Because essentially this one would have inventory, this one wouldn't have inventory, and then if this one doesn't have inventory, you can solve for what inventory is. So your current ratio would have been, so your asset test ratio would be, all right, so you have 5 equal to, so we don't know what current asset minus inventory is, because we don't know what inventory is. We just know that current asset is 6,000 and current liability is 1,000. So if we did 5 is equal to X, which is current asset minus inventory divided by 1,100, We substitute and bring over the 1,100. We're dividing it on that side, so we need to do the opposite of divide, which is multiply. So if we multiply 5 by 1,100, we get 5,500. And that will be our current asset minus our inventory. So we know that our current asset is 6,000. So if our current asset is 6,000, our current asset minus inventory. So we do 6,000 minus this 5,500, and that gives us 500 to represent inventory. So what that is saying is our current ratio or asset test ratio, which is current asset minus inventory. If we do 6,000 minus 500, we get 5,500. And we do 5,500 divided by 1,100, we get 5. So again, we're using the current ratio and the asset test ratio to substitute and solve for inventory. And that will be make inventory 500. Okay, I trust that you're following. If you are not, indicate in the chat. If you are, we'll continue right along. All right, item 31 refers to the following extract from a trading account. Again, the trading account is the gross profit portion, which factors in your sales and your cost of goods sold. We said to find cost of goods sold is your opening inventory plus your purchases minus your closing inventory. So for this, it will be sales minus cost of goods sold is equal to gross profit. Your sales is 900. And from that, you minus your cost of goods sold. Your cost of goods sold is your opening inventory of 200 plus your purchases of 500 minus your closing inventory of 300. So 200 plus 500 is 700. 200 plus 500 is 700 minus 300 gives you 400. So your cost of goods sold is 400. So 900 minus 400 gives you a profit of 500. So your gross profit for this one would be 500. All right, we trust that everybody got that. All right, 32. When a trial balance fails to agree, the difference is entered into which account? Is it a provision account? So we usually make provision for upcoming items. It's similar to an accruals account where we provide for the expenses that we expect to incur during the year. Suspense account usually is for errors. Reserve account usually is for funds that we are holding back. So when we make our net profit, we pump it into a reserve account where we are earmarking that for a specific use. And in control accounts, they are usually used to reconcile maybe like a receivables account or a payables account or any type of account it can be used to. So which one do we do when we have the debit balance and the credit balance on the trial balance not matching? We don't know what the reason for the difference is. We may not have time to figure out or research the difference. So we put it in our temporary holding account. And then when we're able to figure out what is causing the difference, we move it up. So that goes into what is called the suspense account. So suspense account is used for errors. When you have a difference on your trial balance, you don't know what it is for. You may not have time to research it, so you put it into a temporary account, which is suspense. That is correct. Good job. All right, continuing 33. How does an increase in bad debt affect a sole trader's financial statement? So what type of account is bad debt? Bad debt is an expense account. So is it going to affect your gross profit? Your gross profit is made up of your sales and your cost of goods sold. Would bad debt be in that portion? Or would it be in like your expenses portion, which you get after you calculate your gross profit? So gross profit minus expenses give you net profit. So firstly, you have to determine if it's affecting gross profit or net profit. And then, is it increasing gross profit or decreasing gross profit? Or increasing or decreasing gross profit, increasing or decreasing net profit? All right, so somebody says, see a decrease in net profit. So that would be correct. So, and you can always plug in numbers just to make it make sense for you. So we have, so one, gross profit is O because gross profit is sales minus your cost of goods sold. Your net profit is 100. So your gross profit is 100,000. If bad debt was 50 first, sorry, let me do a next number. Your gross profit is 100. Your bad debt was 20. So 100 minus 20 is equal to 80. If your bad debt increase, your gross profit still stays the same because nothing bad debt doesn't affect gross profit. So your bad debt increased to 40,000. So now it has doubled. So now your net profit has gone down. So increases in expenses reduce your gross profit. So increases in expenses decrease your net profit, and increases in revenue would increase your net profit as well as your gross profit. But for this one, it's an expense, so it's going to decrease the net profit. All right, 34, a trader has an operating capital of 3,900. If the drawings were $900 and closing capital is 4,860, what was the net profit? So how do you find? So opening capital plus net profits, because net profit is being added. So when you make your net profit, whatever we get on the income statement, we usually transfer it into the capital figure onto the balance sheet, and that's a part of what causes the balance sheet to balance. So would have added the net profit to what we had in capital already, and they would have taken out drawing because we said drawings is a deduction to deductions from capital, and that would give us our closing capital. So this time we have our opening capital of 3,000. We don't know what our net profit is. We know our drawings is 900. And we know our closing capital is 4,860. So basically what you have to do is add your, so you don't have to subtract the 3,900 minus the 900 because, so we're just working with what we have so far. So we have 3,000 plus X is equal to 4,860. So we're trying to get X on a side by itself. So we can leave X on this side and we bring over the 3,000. We're adding the 3,000. So if we bring it over, we need to subtract it. If we subtract the 3,000, that leaves us with 4,860 minus 3,000. That leaves us with 1,860. If we plug in everything again, we do 3,900 plus 1,860 minus the 900. That should give us the 8,860. So that's how we make sure that it's correct. So 34 is C, so that is correct. All right, 35, in a partnership, which of the following transaction is compulsory? Is it the sharing of profit or losses? Is it the interest on drawings? So not every company does interest on drawings. They may be entitled to drawings, but that doesn't mean that they need to pay an interest on it. Is it interest on capital again? Not every company pays an interest on capital. Interest on capital is just amount that you're earning for your capital that you're investing. Is it the paying of salaries? So some companies, they don't do a share of salaries. What they do instead is to share the profit. So once you're in a partnership, even if it's not distributed right year round, you are still entitled, or there's some sharing of that is done. So in a partnership, that is the one that is compulsory. The others is depending on the partnership. Some may do that, some may not do it. I trust that you're following, and if so, we continue. So 36, M. Brown wishes to increase his provision for bad debts from 8% to 10%. Accounts receivable at the end of the year total $10,000, whilst the balance in the provision for bad debts account was $800. Which of the following would be the correct entry to record the provision for the year? So this is what it was first. So if you're increasing it, you are looking at what it is currently and just adding the difference to the provision amount. If it's going down, you are provision usually carries a credit balance. If it's going down, you put the difference on the debit side. So for this one, it was 8% of the 10,000, and that's how we got the 800. No, it needs to be 10% of the 10,000. 10% of the 10,000 is 1,000. We already have 1,000. We already have 800 in the account. We're trying to change the 800 to and make it 1,000. So we're not putting the 1,000 in the account because we already have 800 there. If we post another 100, if we post another 1,000 to the account, it will have the 800 plus the 1,000. So we're not, and this one is an in and out entry because it's debiting the profit and loss account and crediting the profit and loss account. So that one is out, as well as the amount needs to be the difference. We already have this. So so we already have this amount in the provisional account. So if we add another 800, the account becomes 1,600. That's not what we're trying to do. This one is out. What we're trying to do is to move the balance from 800 to 1,000. So if there's 800 in there on the credit side already, we add another 200 on the credit side. What that does is bring the balance up to 1,000. And then we debit the amount of the increase in the expense account. The 36 is D as in. All right, trust that you're following. If you are not, if you have any questions, feel free to send it in the chat, as well as your answers to any questions that we're going through. All right, 37 for items referred to. Item 37 refers to the following information, which was extracted from the cash book of Dan D. Dare. So she has a balance of 560 in her cash book. She has an unpresented check of 120. She has lodgements not entered on the bank statement of 150. So it asks you for the balance per the bank statement. So you're using the cash book balance to reconcile to the bank statement. So what you have to do is to figure out. So we usually start with or 560, which is our cash book balance. Then you need to determine if the figures are on, so you're reconciling to the bank statement. So the unpresented checks, it would be in your, the unpresented checks would be, they would have been taken out from your cash book, but they would not have been taken out from your bank statement. So you would have subtracted them from your your cash book, but the bank would not have subtracted them. So what you need to do is to basically do the opposite. So you would have subtracted it, so you need to add it back because the bank would not have subtracted that. While lodgements, you would have added them to your cash book because those would have been increases, but the bank would not have added them. So you need to deduct them so that you reverse that transaction. So we do 160 plus the 120 minus the 150, and that should give you 530, which would represent the balance that the bank has on their statement. All right, again, shows that you are following. If not, feel free to indicate. All right, for items 38 to 39, they refer to the balance sheet information for a firm. So they have 3,000 in the bank, they have debtors, and they have stock. So the formula is that assets is equal to equity plus liability. So what we need to do is add up our credit side, which should be the equity plus liability. That will give us 6,000. So this side needs to be equal to that side. So this side is 6,000. We have 4,000 on this side already. That means the difference would be 2,000, which would be it will be 2,000, and that will represent the amount that would make this side be equal to 6,000. So the debtors amount would be 2,000, and that's how you get the two sides to be equal. So the next one says which of the account would be true. We have creditors, and we must have the capital. We cannot have a business that doesn't have an equity balance. So if we have creditors here, so we have creditors, so the other portion will be capital. So capital is here. All right, just that everybody's clear up until 39. All right, moving on to part 40. 40 says which the following information refers to Harvard Sports Club for 2017. So they have this number of members. They have annual subscription for the year per member. They have subscription owing at the beginning of the year, subscription owing at the end of the year. How much should be credited to the income and expenditures account as total subscription for the year? So all we have to do is do the total subscription times the number of members. The amount that is owing, the amount that is beginning is not relevant for this particular question. So if we do the 50 times 50, that should give us 2,500. Again, just you are following, not indicating the chat, ask your questions, and or send your response on what you're thinking for the answer. All right, continuing, 41 says W, X, Y, and Z are partners sharing profits and loss in proportion to their capital. The capital of each partner is shown below. So this person has $300 profit, 200 for X, 100 for Y, and 300 for Z. So what you have to do for this one is to add up all the profits. 300 plus 200 is 500. 500 plus 100 is 600. 600 plus 300 is 900. So it asks you for this person's share of profit, which should be 300. So their share over the total share, and you times that by 7,200. So you divide this by 100. You're left with 3 over 9. 3 can go into 3 one time, 3 can go into 9 3 times. So you're left with 3 can go into 3 one time, 3 can go into 7,300. So 2 4, and then the 0 zeros. The answer for this one is A, 2,400. All right, again, trust that you are following for that. All right, so we continue. It says, which of the following account shows how profits and loss are shared among partners? Is it the current account, the appropriation account, the profit and loss account, or the income and expenditure account? The paper is 2018. All right, the current account shows what the capital that they have in it and their respective shares. The appropriation account shows the split. So it would be the appropriation account that shows the sharing. Profit and loss would be the income that is generated, the net income, and income and expenditure. Those are usually used for like non-trading organizations. 43, the income and expenditure account shows the expenditures incurred and liability owed for the period. So the name gives you the clue. So the liabilities are not in it. So that one is out. Is it the income earned and the expenditure earned for the period? That seems like it, but let's look at the other options. Is it the income earned and asset owned? No. Assets would go on the balance sheet. Is it the assets owned and liability owed? That would be a balance sheet item. So as the name suggests, the income and expenditure shows the total income and total expenditure. So 43 is B. 44, which feature is associated with private limited companies? Is it that they are family owned? Is it that their shares are not so publicly? Is that financial statements are published? So 1, C is out because only the public limited companies financials are published. Is it government agency purchase shares? That's not usually done in a private limited company. So for this one, we're choosing between A and B. So they can be family owned, they can be friends owned, they can't just be strangers. But the key distinguishing factor is B. They do not sell their shares to the public. I did say 2018, so the year is 2018. All right, 45 refers to the following information. Inventory at January 1, 2013 is 1,500. Purchases for the year is 1,200. Cost of goods is 1,400. So we know our formula for cost of goods sold is opening inventory plus purchases minus closing inventory is equal to cost of goods sold. So if we have the 1,400, we have to use that to solve for the balance. So we have opening inventory of 1,500 plus the 1,200. So we're trying to figure out what the closing inventory is. So if you have that answer, you can send it in the chat. So your 1,400 is equal to, so we add what we know. We know 1,500 plus 1,200 is equal to 7,000. 2,700. If we take a number from 2,700, we get 1,400. So we're trying to get x on a side by itself. So what we need to do is do 2,700 minus 1,400 is equal to x. So if we minus 1,300 from 2,700, then we'll get 1,400. So that is how we get 45 and get cost of goods sold to be equal to 1,300, which is dark. All right, continuing 46. A business incur the following expenses, which is capital expenditure. So we have capital expenditures, which are usually items that you have purchased that one extends the useful life of an asset or it's an asset. So usually our assets are capital expenditures, added or revenue expenditures are routine things that we do in the business. So these are like expenses that will go on your balance sheet. So a capital expenditure needs to capture all assets. So we have two assets. So those are the two that we add together to get our capital expenditure. So anybody, what would be capital expenditure? Again, feel free to send your answers in the chat once you have them. So capital expenditure would be 3,000 plus 7,000, which would be equal to 10,000. Factory and repairs and machinery expenditure and machinery repairs would be revenue expenditures, because those are things that you use to operate the business or maintain the assets. I continuing 47. Amalgamate Components was a private company until it admitted additional shareholders by selling shares on the stock exchange. Amalgamate Components can now be described as, so now they have shares on the stock exchange. Are they a partnership, a statutory corporation, a public limited company, or a private limited company? Feel free to send your answer in the chat. All right, once they are listed on the stock exchange, that means they are not public. So it would be a public limited company. I continue in 40. All right, so yes, somebody said C, that is correct. Right, 48, the main reasons why a sole proprietor may consider joining with one or more persons to form a partnership is it that the business would attract more customers? Yes, that is possible. Is that the business will be recognized by the government? So even though even sole traders are still like considered to be businesses. So is it that he can work less if many people are involved in the business? Sometimes that is not always the case. So sometimes they still work as much. The business would get additional skills and capital. So based on, yes, they can benefit from the others, but based on the options, the best answer would be that they're getting both additional skills and additional capital. So that's one of the reasons that they may do it. So 48 is DS in draw. All right, continuing. 49. In order to avoid writing numerous checks for small amounts, a firm may set up a general ledger, a petty cash fund, a general journal, or a standing order with the bank. So standing order just means that you instruct the bank how much to take out, whether every week, every month. General journal is usually where it's a book of original entry where you're recording a transaction and you usually have your debit and credit. General ledger is a T account that is usually, there's one for every single account. Petty cash fund is usually you issue a float and you have a set amount, maybe a $10,000, and you pay small amounts from this amount. So based on this, the petty cash fund is the one that would serve that purpose. So you give the cashier a certain amount and they pay out small items instead of using your cash flow. All right, continuing. Which of the following account best describes the final account of a non-trading account organization? Which one of these books would they have? Would they have receipts and payments account? Would they have income and expenditure? Would they have trading and profit? So they definitely wouldn't have trading because again, they're non-trading. So we know that C is out, 3 is out. So D would be out because D has 1, 2, and 3. So based on the options that are left, we have A and A, 1 and 2, which is A. Because they will have receipts and payments, because they will still receive money, they'll still make out payment, and they'll have an income and expenditure. All right, 51, a business with more than one owner records the division of profit in which of the following accounts? Would it be in a capital account? Would it be a trading account, appropriation account, or a profit and loss account? So they have more than one partner. All right, so more than one account partner. So capital is just for one person. Trading account doesn't have anything to do with division of capital. That is just what the business is selling and paying. Appropriation account would be the one that is used. Profit and loss just shows the expenses. Doesn't have anything to do with division of profit. On page 52, P. Amos is employed by a construction company at a rate of $7 per hour. During the week of December 6th, April, he worked his basic rate of $40. The income tax due on his pay is $20, and he's also liable to pay Social Security contributions of $5 of his gross pay. What is his net pay? So we can eliminate. So firstly, we have to calculate his gross pay. His gross pay would be his $7 times his 40 hours. So $7 times 40 hours would give you 280 hours. So one, we can eliminate this because we know that he needs to pay the $20 income tax, and then he also needs to pay 5% of the gross pay. So we can take out the, sorry. So 7 times 40, $7 times 40 gives you 280 after gross pay. Minus $20. So far we have 260. We can eliminate that because we know that there's another deduction. So next deduction is 5% of the 280. 5% of the 280 would be $14. So now we do 260 minus 14, and that would give us a 246. So his total net pay would be 246, which would be A as in apple. I trust that you are following. 53 refers to the information provided by a business. So what is the bank balance in receipts and payments account for the year ended 2017? So not all of these relates to, so we have to look at which ones. So firstly, you start with the balance. Then the purchase is a reduction. So that would be a payment, so we minus it. Purchase of furniture, also a reduction, so we minus. Sales of equipment. This is the money that we're going to get from equipment that we have purchased. So that would be addition. Inventory, that is just closing in stock. So this is not a payment. It's just what you have left in the balance for inventory. Donations to a charity. So that means you're paying somebody else. That's a deduction. Depreciation is a non-cash account, so that is not added to it. And proceeds from inventory, so that is money that you're getting, so we add that in. So we have 700 minus 500 minus another 500 plus 600 minus 200 plus 1,500. And that would give you the balance of 1,600. All right, so that one is 1,600. So that's B. For 54, the list on the list of balances above, what is the cost of goods produced? All right, so cost of goods produced. So this is a manufacturing code. So that is key. So everything in the manufacturing portion represents the cost of goods sold or the cost of goods to produce. So essentially, you're just picking up the final balance. Because this is all manufacturing, so this is all good part of the cost of the good. So 54 is just the final balance because again, it's a manufacturing account. Everything is in the manufacturing account is the cost of to produce the good. All right, again, feel free to utilize the chat to share your comments, questions, as well as your responses to the questions. 55, the list from the list of balances above, what is the cost of goods produced? So again, definitely is a factor in or opening inventory, factors in or closing inventory, factors in the cost to produce the goods, your indirect expenses, and your factory wages. These are all part of your prime cost or the cost to produce. So we have our opening inventory plus for cost of goods used minus for closing inventory plus for factory wages and then plus for indirect wages. Okay. And that should give you 1,100. So it's this plus this minus this, and then we add this as well as the last one. So we add in everything and then we minus this. But the order is opening capital plus cost of goods of materials used minus closing inventory plus wages and then plus indirect expense, and that gives you the 11,100. 56, a business receives $500 for rent received, rent revenue, and deposits this amount into its bank account. How will it transaction be recorded? So it's money that they got into the bank. So bank needs to be debited. So this one is owed. This one is a debit, but it's a debit to cash. It specifically told you that it was bank account. So it's an income. To increase income, we credit it, and to increase bank account, we debit it because it's an asset. Assets are debited to increase. So this one is B. All right, continuing. 57, S&B Limited net income for the year was 89,000. Of this amount, $8,000 was transferred to the general reserve. Preference dividend paid was 2,400, and ordinary dividends was 6,500. The value of retained earnings for the year was, so for this one, we do the amount, the 89,000. So it's the 89,000 minus the 8,000 minus the 2,400 minus the 6,500, and that essentially will give us what the reserve balance is. And that would give you A, which is 72,100. All right, 58. P Hawk has a machine manufacturing business. The cost of his raw materials was 1,900. Rates and rent total 2,000, and factory wages amounted to 2,500. The number of units produced is 6,640. What was the cost of one unit? So to find the cost of one unit, we need to add the 1,900, the 2,000, the 2,500. So if we add everything, we'll get we get 6,400. If we do 6,400 divided by 640, so when we add everything, we get 6,400, and then divided by the number of units, that gives us $10 per unit. All right, items 59 refer to the following data, which pertains to Tarisha Ali, an employee of a bank. Her monthly salary is 3,500. Her overtime is $800. So her income tax rate is 25% of every dollar above $2,000 of monthly salary, and then 30,000 of overtime. So the 30,000 is just under 800, and then essentially the first 1,500 is taxed. The first 2,000 is tax free. So the excess of the 3,500 is what is taxed at 25,000. So 3,500 minus 2,000 gives you 1,500, and that 1,500 is at 25%. So 1,500 at 25% is 375, and then the 800 at the 30% is 240. The answers used for the total income tax, so you add the 240 and the 375, and that gives you the 650. All right, and then for number 60, which is the last one that we'll do, an employee works for 45 hours in a given week. The rate for The rate for a 40-hour week is $4 per hour, and overtime is paid at time and a half. What is their gross rate? So 40 hours would be at $4. So 40 times 4 is 160. The excess, which is 40 minus the 45 minus the 5 minus the 40 is 5 hours, will be paid at time and a half. So it's $4 times 1.5. So 5 times 4 is 20 times 1.5 will be $30. So they get 160 plus 30. That will give you the total pay as 190, which would be B as in boy. That is the last thing that we'll do. Any questions? Let's check that. If there are no questions, this is the end of the session. Thank you for joining, and I hope to see you on join HTS soon. Because here you can get more practice questions, more paper 2 questions, and just overall concept of how to approach the exams. But for now, enjoy the rest of your day and see you hopefully soon.